Hi, I'm Mike Carr. I have Amber Hessler with me again today, and we're going to talk about what we talked about this week in True Options Masters, hopefully shedding some new insights. So if you like these videos and you want to see more, be sure to click the like button, subscribe to the channel. Let us know what you think in the comments so that we can adapt and deliver the content that you want from us. With that said, over the past week, Amber, you mentioned the pound a few times.
I have. I mean, how could I not? It's one of the biggest stories in the financial media. I'm not sure it's that significant for the US stock market, but when everyone is looking at something, we have to understand the story.
You're right on both counts. I don't think the pound means much to our markets, and we have to keep up with the news. Well, actually, we have to get ahead of the news. And you showed that with the chart of the pound.
Yeah, my volatility indicator, it was on a sell signal weeks before the crash. By the way, the pound dropped more than 3.6% in one day. So over the last 10 years, the average one-day price move in the pound is about 0.01%. So the crash was 360 times more than the average.
Of course, the pound's not the only currency making a big move.
The big story is the dollar, and that's what my research into the pound showed me. The dollar gained more than 20% over the past year, and that doesn't happen often.
We looked at how unusual that is. It happened in the 80s. The rapid appreciation of the dollar then came as the world was resetting after Nixon left the gold standard in 1974. Finance ministers got together in a conference room at the Plaza Hotel in New York. They signed the Plaza Accords, and they all agreed to sell dollars.
Do you think that could happen today?
You mean an agreement among finance ministers? No, the politics have changed. If the US would overtly support other currencies against the dollar, there'd be protests in the street. The policy was killing jobs is all we'd hear, and no politician is willing to take a risk with their own job just to help stabilize the global economy. But the next time we saw the dollar rally more than 20% in a year was the early 1990s. That was when Soros fought the Bank of England.
And Soros won that round.
Do you think that one could happen again today?
No, I don't think spectators are able to break central banks anymore. Central banks now print as much money as they want. They still had some discipline in the 90s and accepted limits on how much money they could create. I think those days are gone.
Well, those two crises involved a global currency reset. Do you think that's where we are today?
Yeah.
Well, thanks a lot for that insightful answer. Any chance you'd expand?
Russia faces a financial crisis. Economic sanctions included removing the country's banks from SWIFT, the global banking network. So banks move money through SWIFT, and Russia can't do that. They developed an alternative system, and they're getting some countries to use their own or to use their alternative, including Turkey, India, and China. So China may be worried about losing access to SWIFT if that country faced sanctions. So the development of an alternative to SWIFT does seem inevitable.
Well, thanks for expanding. And that would mean the dollar might not be the world's reserve currency anymore if Russia succeeds. I think other countries are looking for alternatives to the dollar, and that does set up a potential reset.
I think we covered a lot, and we should probably just wrap up here. We'll be back with more on the reset soon, so be sure to subscribe to stay up to date.
Thank you.